Hi, I'm Max Weisbrod. I'm founder of Baton. And today on Fractionally Speaking, I'm joined by John Williams, the founder of the Sun Business Group. He is a chief revenue officer, fractional chief revenue officer, and also he is a revenue operations expert. Um, John, can you tell us a little bit more about what y'all do?
Sure, Max. Good to be on here today. Generally, what I'm doing is I'm helping growth stage organizations and startup and scale ups kind of pull together the last remaining items that they need for that particular part of their growth. And some of that can be really operationally focused, and some of it can also be, strategy and making sure that, we're doing the right things next that are most important for the growth of the organization.
And what kind of run rate milestones or funding milestones are we talking about when we say growth stage firms?
Sure, absolutely. So a lot of times, no surprise, we run into some of our initial headwinds somewhere between the $5 million ARR mark and $10 million ARR mark. And a lot of those may be centered around things that could be a simple process, right? Generally speaking, what we've done to get here may not get us to that next milestone at 10 million. And so it's really just kind of identifying and removing some of those impediments. And then in some cases, it's actually just adding in some additional process that's lightweight, not heavy, but that accommodates the need for the fact that there are more customers, there may be more products now, and it may not be quite as simple as it was initially, given the fact that we are actually in growth mode. So, generally speaking, each customer has its own unique properties, but most of them, unsurprisingly, fall around, people, process, and technology. So we'll use technology to automate where it makes sense. So we may move away from, managing clients in Google Sheets or Microsoft Excel and move into, things like a CRM, which would come toward our technology piece. And then people are also super important. So we see a lot of headlines today around the importance of building your first team together, and that actually provides longevity as you scale up and bring more team members into the organization. Unsurprisingly, as we grow and bring others in, we now have a new task, which is onboarding and telling our story to a new hire. And many times my clients may not have that formalized yet. So that's an example of where we're pulling together a small piece of process to address people and technology.
That enablement piece is so critical. Um, and a quick aside, isn't it incredible that these founders, through sheer force of will, are able to build like a $5 million business on the back of spreadsheets and like manual data entry?
Absolutely.
Um,
I would
so
say they have it better than the abacus of the early Roman days, but it's still sheer effort, as you suggested.
So, what does the current state for these organizations look like at like this $5 million mark? What's the normal level of dysfunction that's happening inside of an organization? I don't mean that in a negative way. I
Right.
like, there's dysfunction in every organization, but what looks normal inside of one of those organizations at that milestone that shows them that they're ready for that next step?
Gotcha. Absolutely. I would say that it is, there's this barrier of you're kind of hitting the wall of being able to bring in new customers, right? So you'll hear that term tossed around of new logo acquisition and things like this. Is that it becomes increasingly difficult to do that. A number of reasons for that to happen, not the least of which is a competitive marketplace, as well as fighting for budget for other things that could be within your target organization. But generally speaking, it is we're starting to kind of see the cracks in a go-to-market strategy at this point. So if we've been able to, by sheer will and a good amount of luck, get to this level with our go-to-market plan, it may begin falling apart for us now, and it's time to revisit that and make sure that, do we have a good definition of our ICP? Are we selling to that ICP? Did we think we had a good definition of our ICP, but in reality, our customers belong to another segment. They still love us, they're paying us. So we need to go pursue those customers instead of maybe our original ICP. So it's really time to revisit that go-to-market strategy and make sure that we can accurately tell this expanding sales team, what are the attributes of the new customers we're looking for? What problems are we helping them solve? And then what impact are we delivering to that organization, not just the organization, but also to the person who's responsible for delivering that impact to the organization. And in marketing speak, we call these personas, right? And so many times those personas are missing, which means that we're talking to anyone who will give us time to talk to them, or they may not be 100% accurate. So we spend a lot of selling and marketing time to a role scope that may not have ultimately a lot of influence on saying yes to becoming a customer. So these are the things that we would typically find, kind of in the front of that engagement, a customer engagement at this growth level. And the second thing that we find is that as we are converting that interest into contract, otherwise known as sales, right, is that we may not be doing that in the most efficient way, right? It's very easy for me to say, hey, try to focus your selling effort into your best candidates. At the end of the day, salespeople are concerned about making quota, and they want to make sure they have a sufficient amount of pipeline to achieve that. And so it's pretty much not as filtered as it could be. And that means that we're spending selling time in areas where statistically we just stand a lower chance of winning that opportunity. And so those are the two areas where we kind of come in first and do some assessments to see, hey, are we still on target? Are we putting our limited energy and resources in the right places to produce the results we need to deliver?
Well, so if I go into an organization that has like a 25, $30 million run rate, they've got a lot of tools and infrastructure that helps them tell what's going wrong. Um, for these companies who are coming to you, like this $5, $6 million mark, what are they doing currently to diagnose why things aren't working?
Yeah, I would say it's because they're asking a lot of questions, and this could come from just some very simple cohort analysis. And a cohort, of course, meaning a collection of clients that came in at the same time. Um, we look at traditional unit economics of LTV to let us know, hey, our customers generally, when we come in and deliver impact, will stay with us for 30 to 36 months, right? If they are not, if they're falling out of our client funnel prior to that, we should understand the reasons for that. It could have been that they weren't an ideal client profile. It could have been that, we were just unable to meet their technical needs with our solution, right? In that process, it could have meant we sold to the wrong person, right? And so asking those questions and kind of just doing some simple analysis is something that is very helpful. And I'll say too, let's not forget that we don't have all of the answers of a 20 or $30 million run rate yet. You're right. There's a lot of data that provides, clarity of the roadmap. We're still in an experimentation stage, so to speak. When we're at 5 million. In other words, clients are still telling us what they want, and we're happy to develop those solutions for them because obviously that would enable us to grow into a larger organization. So some of our analysis that we do at this point, we do have to take into consideration that there may be a few different segments that could end up being functional cohorts and profitable segments for our business. And so as we're starting to look at some of these, remember we're still in experimentation mode as compared to more mature organizations. And then can we tell the story, from a data perspective of, you know, these are what our this is what our customers are telling us. This is how they're behaving. How far away from where we were headed is this? And do we resist the temptation to pursue it, or is this a valid segment that we should pursue? So that's some of the consternation that's happening at this stage of growth.
Absolutely. One second. Let's see. Just checking my notes and kind of thinking about where I want to go next. But you're doing great. Like you're really awesome. Um, let's see, because you covered a lot of ground, which is, it's great. Let's see. So, um, So for the founders who are like at this stage, right? They feel this pain of not really understanding why growth has stalled out. They know that they need somebody to come in and diagnose and fix and restructure that. Um, what questions should they be asking their potential partners to understand if they're the right fit to solve the problems that they have?
That's a great question. And maybe some recommendations that I could put forward for founders would be that you want to work with someone that you feel as though you can communicate with. So just, if you're speaking with a particular candidate and they're asking really good questions about your business, they're listening to your responses, they're following up with secondary and third questions and interjecting some experience that they've had related to a similar issue. I think that those are all great signs, right? Ultimately, the resource will be working with your company to help you get to that next level of growth. And I'll also say that at the end of the day, we're two humans that are working together. So that's why that communication is really important. Need to be able to receive good ideas, good information, as well as how can we communicate uh, bad information between each other, right? And I think that those are kind of the chemical markers that indicate this would be a great fit for us to not only solve the business problem, but also to enhance the culture that we're creating in this company at the same time. So I would say that communication portion is super emotional versus rational. I think the rational part is fairly easy to get to because it's a matter of saying, hey, can you walk me through another experience that you've had that was similar to this? And really, I'm more interested in learning about how you approach the thought of solving the problem more so than the technical details of exactly how you did it. Be curious about how they did it, but I think it would be important as a founder to understand how this temporary partner is going to work with you and communicate and then actually deliver the results that you need through their experience. I'll say that fractional has a unique place here because you immediately have access to very specific expertise. So you can specifically seek someone who has experience in your growth area, in your vertical market, in your marketplace horizontally, and you can kind of configure to order the type of experienced executive that you have. And in a traditional sense, you may look at a 6 to 9 month time frame of where you're out hunting for that particular talent to bring them onto the first team and as a full-time employee. And I'm not saying that you don't pursue that, but a fractional would allow that to happen within weeks to be able to deploy that type of expertise, and you could run that in parallel with your full-time search. And so it's kind of the
Mhm.
best of both worlds there, where you're able to get the expertise that you need now, and then plan for your strategic first team growth at the same time. So time seems like it's always the number one resource that any of us are not able to get more of. And so that time component, how quickly can we deploy this expertise, is super important.
So you've got experience building out early sales teams, right? Like transitioning from a company from the founder-led sales to like their first sales team, hiring first sales reps, getting them trained, enabled. Same thing on probably the success side. Talked a little bit about that in pre-meeting, and the infrastructure stuff that's gluing everything together across customer touch points. Um, if you're a founder at a $5 million organization, how do you know if you need a fractional chief sales officer, a fractional chief customer leader, a fractional chief revenue leader? How do you think about the difference there? Like, how are you tailoring that JD?
Right. I would say that, you would have a certain amount of latent talent that's already in your organization. So, for example, if you have a really strong product development team who's also functioning as product marketing, and they have that capability to do so, right? Then you're not necessarily looking to augment that strength that you own, but rather you're looking for areas of where do I have gaps in the functional expertise that we need right now. And that may be, as an example, that may be as a sales leader. As a founder, you're kind of functioning as the informal sales leader for a time, but you eventually outrun your own headlights. There's just so many places the business needs you to be of higher value delivery internally. And so that's, I would say, the time that you need to get an external sales leader in this example would be one where I actually need to ask someone questions like, how are we performing this month or this quarter against where we need to be? What are our major obstacles? Where are we winning? Where are we losing? What opportunities are we leaving on the table because we just don't have time to get to them? And then, where is help needed in the organization? Do we need a new price book? Do I need a discounting guide? Do I need better front of funnel information coming in? And when you're asking those kinds of questions, and you don't have the answers to them, that's the sign that you may need to have some expertise. And think of it as functional expertise. I need someone to be able to answer these questions for the business, and then also be able to kind of give me a little bit of a quarter plus one, quarter plus two guidance on where we are. Especially important if we have a longer sales cycle than a quarter, right? I just don't want to get a surprise every time it's a new quarter. So having someone who could own that responsibility for the business is the indicator that we probably need to have someone sit in the chair here at this point.
Gotcha. So now shifting gears more to the what it's like being a fractional and being a fractional executive. Um, Usually people have like a long tenure before they switch in. How long have you been running this practice as a fractional executive?
Yeah, and I would say I'm relatively new compared to a lot of my peers. So I've been doing this for 3 years. And I have found a lot of benefits here that correlate to the work I did as a full-time employee. And that is that, again, you're managing transformations in the business constantly as it's growing. You're managing multiple projects as a full-time executive. When you're a fractional executive, it allows you really to have a bit of a laser focus on resolving the specific issues in the proper order that you need to. And oftentimes this is because you have the privilege of not taking on a lot of the additional distractions that are present in the business, right? And so by doing that, it allows you to really bring forward, action things that need to get done. So basically, long to-do lists are able to be moved through pretty quickly because you have the privilege of being able to focus in on it. I've also been asked, hey, as a fractional leader, or do you feel like you're disconnected from your client's culture? And I'll say quite the opposite. In order for me to get the things done that I need to as a fractional leader, I have to absolutely have persuasive skills, within the organization as if I am a full-time employee because without that, I can't get the work done that needs to be
Mhm.
done from everyone. And I have the benefit of being outside the organization so that, and many times I'm the tiebreaker on something that may have been an internal logjam, but because I'm not emotionally invested in that argument, I'm able to really approach it, very stoically and gain agreement and acceptance and move forward from that way. And it honestly allows everyone to just save face and get things done, you know.
Absolutely. In my own fractional practice, I see this all the time, right? First of all, it's still really critically important to be able to pull together and hold a coalition in order to get things done. And then on the other side, because you're an outsider, you're not read as being like enmeshed in the politics.
Right.
You're a neutral arbiter who's just bringing in outside expertise to try and move things forward.
And I do think you have to demonstrate that with authenticity, right? Because sometimes, especially in those first few weeks, there's some uncertainty about, what are your motives and what's going to happen to me? Are you the hatchet man, right? And it's like, okay, let's get this out in the open and let me demonstrate why I'm here and connect, authentically so that you have an understanding that I'm here to help, right? So,
And those the people on the ground who are doing a lot of the blocking and tackling, they have a huge number of insights into how the organization can improve and where the gaps are. Um, how do you think about um, the differences between the goals that the executives are trying to achieve and the tension between that and the issues and pain points that the existing resources are feeling on the ground. How do you manage that in order to build trust?
yeah, that's a great point. And I'll start by saying that tension is healthy in an organization because it's the opposite of complacency. Complacency will get you out of business very quickly, right? Comfort is not a place that you want to be early in the growth part of the organization. So you do want some tension. You want competition of ideas so that the best candidates can rise and we can act on those quickly. It's super iterative in the early growth stages, right? Let's try this, let's try this, let's try this. And then you land on a repeatable, consistent recipe that gets you up into 30 and $50 million, right? So as we get there, there will be some tension, and you're absolutely correct. There are many voices, and I'm sure that founders, that is no big secret that there are many whispers in your ears all throughout the day and evening. But the important point here is that we do want to draw the alignment of here's where we're headed, here's the reasons why we're headed in that direction. We are in agreement that we would consider that to be success when we arrive at that destination. And so, it's the logical argument of why are we doing the things that we're doing so that we can then measure the efficacy of those ideas. This is a better idea that aligns with this direction we're traveling than this idea. It doesn't invalidate the second idea. It's just that the first idea aligns more strongly. Um, and this is important because if we do have a change in direction where we're headed, that second idea may actually resurface and we may implement that idea. So I'm not going to say all ideas are great, but I'm also not going to say all ideas are bad. It's a
Mhm.
matter. timing and how well does that align right now with where we're trying to get to the next milestone. And I think kind of being forthright and forthcoming with that in a transparent way, especially in an early, tight knit organization, really helps people understand that and put their energies into where we're headed, in contrast to maybe holding a grudge and no one listens to my ideas and just kind of mentally checking out.
So there are two things that come to mind when listening to you go through this. The first is the concept of a Chesterton fence, right? The idea that if there's a decision that's been made in the past, before you undo it, you should understand the reasons behind why it was done, right? Um, and like you were saying, you need to communicate the why so that you also know, like, hey, if that's no longer true, we should get rid of that fence
Totally.
too, so that we could explore the other idea. But the other thing that's very interesting is you're talking about this internal alignment. Earlier, you talked about enablement, really, the training of new staff, communicating of like how things work, all of that. And those are two very key parts of kind of like culture setting. And what do you see your like place being when it comes to helping to define and iterate on the culture of the organizations that are your clients?
It's a great question, and I encounter this on every client visit, right? It's that I want to make sure that I am supporting the first team, and in particular, the quarterback of the first team, which is the CEO. So, though, that's my North Star culturally within the organization, right? Is that let's get behind the first team, let's get behind the CEO in helping to deliver the messaging of culture, the components of culture to the organization, right? I'll say that, if there's something that there's a yellow flag here or maybe something amiss, this is very important to have a conversation with the founder or the CEO initially, right? And these are just, reflective conversations. So kind of one-on-one with that founder as it relates to culture and just providing kind of some outside context with the intention, again, of being helpful and additive. Uh, Once we exit out of that conversation, though, that's we are going to implement the cultural direction that's been established. I think that is part and parcel of the lifeblood of a successful organization. And we can debate whether the decision was the correct cultural decision or not later, but ultimately that is so important for us to all be unified on and behind, because ultimately all of the client-facing assets in our organization will intimate that culture to our customer, and that's what we want that customer experience to feel like, is that they're working with an organization that's focused on creating the impact and standing behind that and doing the things that need to be done to make sure that that happens.
There's that Amazon principle of disagree and commit, um,
That's
which
it.
I've absolutely leaned upon in past engagements. Um, so one of the key issues that a lot of fractional executives deal with um, is really like lead generation and pipeline. Um, so when you're thinking about like that, those first like five deals that you were able to pull in, what do you think were like what was key to making that happen?
Gosh,
What's
that's
like your
so
advice
important.
to people who are in the early stage?
What a great question. And I can share with you my experience that uh, I was unable to get my first clients just simply from my own brand, right? That was just really, really tough. And the way that I got into the community and as an operator practitioner in this way as a fractional was through or other organizations. And what I mean by that is AdviseWell was one of those where, there's a small group of executive members that service a particular niche of clients, and I was invited to join them on client engagement and perform a specific role in there that had to do with sales and revenue operations, right? And then from there, that experience then led to another client assignment, which led to a referral outside of AdviseWell with another organization similar to AdviseWell, where it was a group of executives helping growth organizations get past their unique hurdles that they had. Until finally last year, I was able to get my first on my own client. So I would say that the aspects here are obviously your network is something that you will continue to develop and invest in every day, just like a garden. But I also would like for others like me to consider looking for groups of professionals, small groups, that need your particular expertise for a specific client engagement. So be open to working with other groups when you're facing clients, and then that will help you accelerate building your pipeline and also building your referral database. I imagine that at some point it would seem reasonable to have 3 to 6 clients per year, given that the engagements typically are, 6 to 9 months, and you'll have some overlap. Again, fractional means you may not be working exclusively with one client, but rather a few days out of the week. And so ultimately, your pipeline doesn't have to be huge because your customer set is relatively low. But you do have to make sure that you're using the most of your network. And so consider these other advisory groups or consulting groups as partners and as an additive for your direct sales efforts.
Um, there are quite a few people who have said similar things, right? That it's these relatively umbrella group professional services organizations who have a proven method for pulling in top of funnel and clear customer trust, who are doing some layer of initial vetting. And pulling in people into their network. And one of the great things about being fractional is it is contract, right?
Right.
Um, and the way that these umbrella organizations are structured is also, leveraging the fact that people are basically 1099s.
Right.
So they have an incentive to keep a full roster. Of potential partners who have proven expertise. Um, and it makes so much sense to give render unto Caesar what is Caesar's, right? Um, in order to collaborate with them and not have to worry so much about like the very, very top of funnel. Um, and more get to focus on, conversations with people who are in market for what you're trying to do.
Yes. And it's the dual sided coin of being a specialist, right? Is that, yes, you're very special, which narrows down your total addressable market, but it's also what makes you highly sought after. I would say that it has not been my experience that my clients are looking to hire a generalist. My clients are looking for very specific remedies, very specific business cases over a very well-defined amount of time, right? So I think that these things come together very well. Hollywood did a great job of doing this with, a movie set. So they're bringing in, directors and acting talent and operational talent to create a movie, and then everybody goes back and does something else, right? And so I think that that's a plausible explanation of where we are today and applying these kinds of expertise skills into the world of software development.
Absolutely, absolutely. And I think it's only going to get more interesting um, with more and more work happening remotely, um, and with the current macroeconomic environment. Speaking of which, um, what do you see happening for fractionals in the next couple of quarters? What are the what headwinds and what's at our backs?
Right. Well, and I think that that's a great point. When we look at 2023 as compared to 2022, just even that 1 year is a huge difference. And of course, 2022 was radically different from 2020, just 2 years prior, right? So we are in the washing machine of, change events that are imposed on all of the growth organizations. So we've heard a rising tide lifts all ships. Well, a low tide lowers all ships, right? And so as we're looking at the second half of this year, uh, what's imperative is that we are taking the learnings that we've had from the change event from Q3 of 2022, right? When we saw sales cycles beginning to extend further out. We've seen a decrease in win rates that were, in the upper to mid 20%, now below 20% now, as published by Winning by Design and Bench Sites. And the impact that this is having is, restated is we're winning 1 out of 5 opportunities that we have in our pipeline. And I would say, last year I might have said, well, maybe that's because, we did a poor job of targeting and, maybe 4 of those customers were just not great targets. This year, I think that there may be some additional information that's hidden in there. And it's worthwhile, I'll say, Max, to look into your closed loss just in this year. So since January of 2023, because that is most representative of what's going to be the behavior in the second half of the year, right? So may not want to go too far back into 2022 just because our economic conditions are not aligned, right?
Mhm.
And so the first half of this year, if we've lost 4 out of the 5 opportunities that we've had in our pipeline, statistically speaking, I think it's super important to understand the reasons why those were lost. Too often, I find that salespeople are like, I really hated to lose that deal. I had 9 months, in that deal, but I can't really cry about it. I still have to go hit my quota. So it's like, we almost quickly roll off of the loss and start pursuing the new logo. Unfortunately, sometimes to just repeat it again. And so we don't take the time and invest in understanding why did we lose that deal? Why did that end up as a closed loss? Because the outputs that come from that would inform product if we were missing a feature or a capability. Super important for product to know that, right? Um, if it was pricing or packaging, a lot of times we just hear, oh, the competition won, it was price. Well, it's important for us to understand that and kind of get underneath that a little bit because it's possible that we could repackage that solution in a way that price is not as much of the deciding factor. It's more about the impact that we can deliver. And that would go back to our sales enablement and helping our sales team finish the rest of this year, uh, you know, in a better way than they performed in the first half of this year. By having the benefit of understanding how to improve the messaging, and that would include pricing, packaging there. And it may have, ultimately been one of our first suspicions is we were just so eager to get additional pipeline in that we said yes to some opportunities that really just weren't a good fit for us at this time. So statistically, we weren't going to win those opportunities anyway. But yet we invested the selling time and the management of that opportunity in the first half of the year to walk away with nothing. So I feel like we've already paid the bill in the closed loss we should be able to take away some insights and learnings from that so we don't have to pay the bill again.
Hmm. Hmm. So we see we see um, the sales cycle extending, the win rate declining. Those things on their own are increasing CAC because you're using more sales
Sure.
time per lead, and you're getting getting less revenue to spread across that.
Right.
Um, and then on the other side of this, um, I just saw a fund closed with 1/10, a growth fund closed with 1/10 of the capital committed that they were trying to raise. Um, what does this mean in terms of posture for these clients? Where is their focus, shifting from, and where is it going to?
Yeah, so I would say that given that particular situation, that can you guys come back in just a little bit? I'm sorry, I'm running. Thank you. Um, so I would say in that particular situation, there's a lot of dry powder that is on the sidelines. The attributes for deploying that capital have significantly changed, right? And so if we don't have the strongest unit economics to present, if we don't have a very good, strong case for describing our market, meaning ICP and the personas that we're pursuing, uh, those are red flags for investors. It's that there's not a scalable opportunity here. So you're right. There's a ton of capital out here that's waiting to be deployed, and I think what founders and CEOs are doing this year is making sure that they've got their financial house in order, the narrative that supports the growth. Whereas maybe perhaps even as early as 2 years ago, it was a matter of this is a great idea. It's a large TAM. We've got a seasoned executive team to go pursue that business. There was a abundance of capital to go make that happen, right? And then today, we're just really seeing where the investors are spending more time on due diligence, to vet those candidates who do have their financial narrative in order and have demonstrated at least the beginnings of a revenue engine where they can effectively attract attention, convert that attention into contract, and make the impact that was proposed to the client in retention, right? So we're making the impact we said we would, and we retain that customer with the possibility of expanding the usage and expanding revenue. So those are the things, in my opinion, that are paramount for us to think of when we're thinking of beyond next quarter, beyond next year. It's how does this play into getting our financial narrative in order so that we can support the growth. I want to make sure I answered your question there. I felt like I bounced around a little bit.
I think that you did. And I think it kind of plays into like David Sachs' model, the burn multiple type concept. Um, thank you so much for all of your insights. And that's like such a critical story to build, right? It's a different story than companies were having to tell last year, and it's a different story from the one that they were trying to tell 2 years ago. And it's important that they get all the numbers right and build everything to that new story, which is more about functional unit economics, and not just acquiring customers to acquire them. Um,
Absolutely.
so thank you so much for joining me, John. For anybody who wants to get in touch with you, where's the best place for them to find you?
So they can find me on LinkedIn pretty easily. I'm known as the SaaS CRO.com. So I look forward to helping those. And my big passion here is that we on LinkedIn. And then also my direct email address is first initial last name, J Williams at sun, like the bright thing in the sky, businessgroup.com.
Well, thank you so much, John, and to everybody, thank you for listening.